Welcome to the Tesla Daily News Podcast for Friday, January 30th, 2026. Today, we're breaking down Tesla's big strategic pivot, shrinking the car lineup, spending aggressively on autonomy and robots, and tying itself even tighter to Elon Musk's AI ecosystem. We'll translate the headlines into what matters for revenue, margins, and Tesla valuation. Story 1. Tesla just posted its first ever annual revenue decline, and it changes the narrative for the stock. Context. Tesla has long been valued as a growth company, so even a small revenue contraction can force investors to reprice the multiple. Details. Multiple reports say Tesla's full-year 2025 revenue fell about 3% to roughly $94.8 billion. Annual profit fell 46% to about $3.8 billion. In the fourth quarter, net income dropped about 61% to around $840 million, with quarterly revenue around $24.9 billion versus about $25.7 billion a year earlier. Impact. The near-term message is margin pressure and weaker auto demand. Even if Tesla beat certain profit expectations, the direction of travel is what drives analyst models. Lower earnings power in the core vehicle business pushes investors to ask how quickly software, autonomy, and energy can take over. Takeaway. For investors, the key question is not whether Tesla had a rough quarter. It's whether the company can re-accelerate top-line growth without sacrificing margins, and how much of the valuation must now come from autonomy and robotics rather than cars. Story 2. Tesla is officially winding down Model S and Model X, and Fremont is being repurposed for Optimus. Hook. Two of Tesla's iconic flagship vehicles are heading for an honorable discharge. Context. Model S and Model X are historically important, but they've been a small slice of volume for years, and maintaining low-volume platforms can drag on manufacturing focus. Details. Elon Musk said production of Model S and Model X will be wound down as soon as next quarter, with production ending by the second quarter of 2026 in several reports. The Fremont factory capacity is expected to shift toward building Optimus humanoid robots. Impact. In the short run, discontinuing S and X likely does not move total deliveries much, but it could improve operational focus and reduce complexity. The risk is brand signaling. Stepping away from premium halo models can make Tesla look less like a full-line automaker. The upside is that Tesla is telling the market, clearly, that Fremont floor space is more valuable for robots than for luxury sedans and SUVs. Takeaway. Watch for two things: whether Tesla replaces the lost gross profit dollars from S and X with higher margin products, and whether the Fremont transition causes any disruption to Model 3, Model Y, or other programs. Story 3. Capex shocker. Tesla is planning more than $20 billion of capital spending in 2026. Hook. Tesla is stepping on the spending accelerator, and Wall Street is paying attention. Context. Capital expenditures are the bridge between strategy and execution. Big Capex can build moats, but it can also crush free cash flow if returns are delayed. Details. Tesla said capital expenditures will exceed $20 billion in 2026, roughly more than double some prior expectations per several summaries. The company framed this as investment in humanoid robotics, robotaxis, and AI infrastructure. Impact. Higher Capex can pressure free cash flow in the near term, especially if auto margins are already under strain. For the bull case, this is Tesla trying to buy future optionality, robotaxi scaling, Optimus manufacturing, and compute capacity. For the bear case, it's a very expensive bet with uncertain timelines. Takeaway. If you're modeling Tesla, you have to decide whether this Capex is growth Capex with high returns or Capex that delays profitability. The stock will trade on confidence in execution milestones. Story 4. Robotaxi progress is becoming more measurable. Tesla is now talking about paid robotaxi miles. Hook. The robotaxi narrative is moving from slides to metrics. Context. Autonomy has been a valuation pillar for years, but investors have wanted concrete indicators of real-world deployment. Details. One report notes Tesla disclosed about 200,000 paid robotaxi miles in December and described a fleet of more than 500 vehicles in Austin and the San Francisco Bay Area, with claims of rapid month-over-month scaling. Impact. If Tesla is truly generating paid autonomous miles at scale, that supports the thesis that autonomy can become a material business line. But investors should be careful. Paid miles alone don't tell you profitability, safety performance, regulatory durability, or whether the system can scale beyond a few geofenced areas. Takeaway. What matters next is evidence of unit economics and expansion speed, cost per mile, utilization rates, and how quickly Tesla can add cities without heavy operational overhead. Story 5. Optimus is the headline, but Musk admitted a key reality: no Optimus robots are doing useful work in Tesla factories today. Hook. Tesla is betting big on robots, while acknowledging they're not yet contributing. Context. Investors can tolerate long R&D arcs if the roadmap is credible and milestones are hit. Details. Reporting from the earnings call highlights Musk saying there are currently no Optimus robots doing useful work at Tesla, despite prior optimistic framing. At the same time, Tesla and Musk continue to talk about scaling, including ambitious production targets in the future. Impact. This cuts both ways. The honesty can help credibility, but it also reminds the market that Optimus revenue is not near term. That matters because the car business is slowing right now, and investors will ask what fills the gap. Takeaway. Treat Optimus as an option with potentially huge upside, but demand evidence, pilot tasks, factory deployment KPIs, reliability, and a real bill of materials that makes margins plausible. Story 6. Tesla is deepening its AI bet with a $2 billion investment into xAI. Hook. Tesla is not just buying GPUs, it's buying exposure to Musk's broader AI platform. Context. Tesla's valuation increasingly leans on AI narratives, autonomy, robotics, and inference at scale. This investment ties Tesla's fate more tightly to Musk's AI ambitions outside the core company. Details. Several outlets report Tesla will invest $2 billion in xAI. Impact. Investors may like the strategic alignment if it accelerates model development for autonomy and robotics, but it also introduces governance and capital allocation questions. Markets generally want clean structures. Is this the best use of Tesla shareholder capital versus in-house compute, dojo, vehicle programs, or energy storage expansion? Takeaway. Watch for disclosures about what Tesla gets in return, access to models, compute, joint development, or preferential economics, and whether regulators or shareholders push back on related party dynamics. One more quick market backdrop. EV adoption in Europe continues to shift fast. Hook. Europe is steadily becoming more EV native, and that affects Tesla's competitive landscape. Context. When battery electric sales overtake petrol in key months and markets, like Norway, hit near total EV penetration, the opportunity is huge, but competition is intense. Details. Reuters-based reporting highlighted that fully electric sales in the European Union overtook petrol in December, and Norway's 2025 new car market was about 95.9% fully electric. Impact. The demand ceiling is rising, but Tesla's share will depend on pricing, refreshed products, and localization. This also matters for margins. Competing in a mature EV market often means more incentives and tighter profitability. Takeaway. Tesla doesn't need EV adoption to be proven anymore. It needs differentiation, software, charging, autonomy, and cost leadership to defend share and pricing power. Let's wrap it up. Today's big themes are clear. The core auto business is under pressure. Tesla is cutting legacy complexity by ending Model S and X, and management is asking investors to underwrite an expensive pivot into robotaxis, Optimus, and AI, including more than $20 billion of Capex and a $2 billion xAI investment. For tomorrow, watch for analyst note fallout, price targets, margin assumptions, and especially how the street models free cash flow under this heavier Capex plan. If you want this every morning, subscribe to the Tesla Daily News podcast and follow us for daily Tesla updates.